You only need one indicator to trade this strategy. In fact, yeah, go and have a look. That's all you need. You just need that. Nothing else. Charts are a 50-50 game. When you pick a trade, it either goes up or it goes down. But you're probably wondering how you pick that trade. You're probably wondering what the best way is to actually pick that trade out of a chart and out of a market. How you can manage your risk. And that's what we're going to talk about today. How do you pick a trade off that chart with only one indicator, with only a simple way of picking your trades out? I've told you guys 100 times that you've got to separate the charts from the strategy. But today we're going to talk a little bit about system. Today we're going to talk a little bit about charts. And I'm just going to show you quickly on the chart the easiest way to manage that system and the easiest way to pick out your trade. For those of you who don't know me, hey, I'm Rob. And for those of you who do know me, I am still Rob. It's Coffee with Rob. So before we pop over to that chart, let's have a sip of coffee. And then remember, just keep this in mind. This is extremely, extremely important. Trading is risky. 60 to 80% of traders who trade position trading or swing trading actually lose money. And I know you think you're going to be part of the 30 or 20% that win. I know that's how you're thinking. We all think that way, and it's a good way to think, and it's a positive way to think. But at the end of the day, 60 to 80% of traders do lose money, and it could get complicated for you. Do keep that in mind. On day trading, on the 5-minute and 1-minute charts, 99% of traders actually lose money. And I know you're thinking you're going to be part of the 1%, but yeah, once again, 99% of traders lose money. Let's go and have a look at the charts, and let's go and have a wee look at how you can actually take a trade on a chart with confidence and with a feeling that you're going to have a positive result from what you're doing. Let's go and check it out, guys. Let's go and have a wee look, shall we? Now, if you go onto this chart and you go and have a look at this chart, you'll see that there's absolutely nothing on here. I haven't added the slightest indicator whatsoever. And you're probably wondering what indicator we're going to use to be successful when trading. The only thing that we use is price action. We don't use moving average crossovers. We don't use MACD, stochastics, RSIs, overbought, oversold, volume, and green cheese on the moon. Moon moves to the left and it falls out the sky and so on, and then we take a trade. No, we keep it simple. The easiest way to keep it simple, I'm on the 4-hour chart here and I position trade. If you 5-minute trade, then you're going to just move up to the 15-minute or the hour chart. What I do is I'm on the 4-hour chart because it's easier for me to trade this way. When I'm on the 4-hour chart, I can go and I can relax and I can go down the shops and leave the trade running. But what I do is I take it to the daily chart. I put it on the daily chart. It gives me the advantage of seeing a candle that's got a whole day's information on it, not just 4 hours. Now I've got really strong information. And then I'll take it to a line chart. A line chart gives me the closing prices, and I'll see if there's any support and resistance on this particular product. And from what I can see here, I'm just going to make this a little different color here. What I can see here is there is a level here. There was a level here that it broke through. It's clearly broken through that. So what this was a resistance. It broke through that resistance, and now it's a support. So it can come back to that support and then carry on after it's retested it. I could draw another level in here, but what's the point? It's already gone through that level. So that's a new level. The other level that I'm looking at is the trend. Trend is your friend. It either breaks the trend. There's 3 ways that we trade. We trade with the trend, we trade in a range, or we trade counter trend when it breaks the structure and it breaks the trend. So what I'm looking for here is what is the trend here? And I take the lowest point. I look for 3 points that it's touching. It's a bullish trend. It's going straight up. Now you've got a trend line going straight through this level. You can take this line and you can move it to the upside just so that you've got a nice railway to work from. And then you can draw another one in if you like from the bottom here, straight up, touching the 3 points. Gives you a clear indication of what's happening This is the S&P 500. It's actually going up in that level. You'll notice I just picked any old trade. This is fine. Take it back to the candle charts. The reason I use the candles is then I can actually see the colors of the candles. I can see when it's red and when it's green, because I'm looking for a green candle to take a long trade when it's closed, and I'm looking for a red candle to take a short trade when it's closed. And I'm talking a little bit slower to you guys so that you can understand this clearly. I'm trying not to rush through it. I know it may be better if I speak a little bit faster and it makes it a little bit more exciting and you can get through the video, but I am trying to show you how to trade this. So please bear with me for a second here. What we do, we take it back to the H4. We take it back to the 4-hour chart. I know a lot of you guys will be looking at this and thinking, well, where's the trade on this then? At the moment, there literally isn't a trade on this as we stand. What we're waiting for this to either come back down to this level here. Now you see the confluence here. We've got the support here and we've got the trend support. So if this comes down here, it's going to give us a double confluence that it's a good situation to be in. Now, either the red candle will break through this and give us a short trade, or the green candle will go to the upside and give us the long trade. And that's the basis of how we work. In other words, if it gets down to here and it bounces up with a green candle, we're going long. If it gets down to here and it breaks through with a red candle, we're going short. And that's as simple as trading gets. That's all you need. You don't need anything else. The most important thing is to understand you must wait for the candle to close. So if you took this long trade here, you wouldn't have taken it when it started going green. You would have taken it when that green candle actually closed. You would have taken the trade from there all the way up to that point there. Same as if you get to the top and there's a red candle, you wait for the red candle to close, and then you start taking the short all the way down. Simple as it gets. There's nothing else needed. You can add other things into your trading when you need to, when you can't see something, when you're looking for some confluence, like you maybe want to add a supply and demand, or maybe even a Fibonacci indicator or something like that, because you learned that on your course. There's nothing wrong with that. Every single system in the market works, because all trading on the systems is 50-50. Let's go back to our chat and let's carry on talking about this. So now you've seen the charts, and now you know exactly how you actually need to take your trade. You need to wait for the candles to close. You don't need a million indicators on your chart. Have you seen these charts where there are 40 screens on the wall and there are 5 million different lines on the chart? You know, I've had guys come to me and say, hey, Rob, what do you think of this trade? I look at the monitor, I look at the screen, and there's lines absolutely everywhere on the screen. I couldn't tell you where to start. I couldn't tell you even where to look. There's just so many lines there, I don't know what's what. And the guy will say, it's this green cheese, monster munch, little indicator thing, blah, blah, blah. And I'm like, really? And if it bounces off this line and it moves on to that line and then it touches this one and it moves to the left. I tell you what, guys, in the 33 years that I've been trading, I've never seen anything like it. So many different ways and so many different things. Now, don't get me wrong. Every single system in the market has the ability to work. And note I said system, because a system is on the lines and the strategy is your business plan. Now, the system is your ability to pick an area of stop loss, to pick an area where your business plan is going to work, to plan your trade. That's what you need. The trade on the lines is just a high probability, and all it's doing is giving you the ability to manage that trade and to manage that risk. Because in all likelihood, if I took a coin and I flipped it 10 times, it would land on tails 5 times in all probability and land on heads 5 times in all probability. And then you'll say to me, but Rob, you know, if it's 50-50, how on earth am I going to make money? How can I make a profit if I'm losing 5 and winning 5? Well, it's really simple. The strategy is simple. What if I gave you 2 for every heads and took away 1 for every tails? Everyone would choose the heads, wouldn't they? Because it just makes sense. The odds are in your favor. You're getting 2. You do the same with trading. When you take a trade, you try to make your wins bigger than your losses, and you keep your losses smaller. The trick I use in my strategy, as I've told you in all the videos, you can go look at all the previous videos, especially the last few, where I only talk about strategy, and the strategy is keep your risk the same on every single trade. As long as you don't change your risk on every single trade, you stand a chance of making a bigger profit. Because that's what goes wrong, is you keep changing your risk amount on every trade. You don't really have a plan. You just get into trading, and then you end up kind of wondering what happened and why you lost. You see, it's all in the mind. It's all psychological. You have to get over the fear. You have to get over the patience. You have to get over the fear of missing out. There's a whole bunch of things that you have to get past on the business plan side. But on the system side, I can teach this to a primary school child. You don't need a lot of information on the chart. All you need to know is in your mind is which way do I think this is going to go? And all you do is exactly what I did, is draw a line and then work out where you want to risk. You put your risk in place and then work out where you want to take your profit. Now you've drawn a line in the sand and you've made a decision as to whether to buy or sell, because how difficult can it be? You've only got to choose buy or sell. You see, it's the most difficult thing in the world when it's real money. When you put money on the line and you have to choose red or green, it becomes insanely difficult. It's not that easy. You can't just throw a dart at it and say, oh, it's going to go up now. You don't want to do that, although you could and manage it, but you don't want to. When you take the trade, you want to have a feeling that it's actually going to go in your favor, that you're actually going to gain some kind of advantage from the trade, that you're going to have some kind of edge when you take the trade. Who wouldn't? So my point is that systems are 50-50. And when you take the trade, all you got to do is learn to manage that trade with the business plan. And you've got to learn to separate the two. Many of you will argue with me based on the 50-50. I know this. A lot of you are going to come back to me and say, the market's not 50-50, algorithm this and mathematics this and story this. Thing is, when I started trading, there was no computers. There was no algorithm. There was no one hunting out my stop loss. I realized that I was up against the pros. I realized that I was up against human beings. And I realized that it was a buy and sell market. And if I'm buying, someone's got to be selling, which means there has to be an opposing view to my view. In other words, someone disagrees with what I'm doing, otherwise they wouldn't sell it to me, and the market would be inefficient. The whole point of that trader selling is for me to buy. And the reason he's selling is because he thinks it's time to sell. And the reason I'm buying is because I think it's time to buy. Does that make sense to you? Is that something that's computing? Does that aha moment come through? It's not the charts that you're trading. You're not trading the charts. The charts are a tool that you can use to give you an efficient trade, to give you that high probability. You see, without the charts, it's very difficult to pick the trade. If you just take all the numbers that are rolling up and down all the time, and you try and use those numbers to take your trade, it becomes insanely difficult to pick out the numbers because they're just random. But if you see a chart and you see, because human beings are creatures of habit, and what they did before, they might do again in high probability. So you look at it and you say, if I look at this chart, this has happened before, so it'll probably happen again in the future. That's what you're looking at. That's all you're looking at. So you take the trade based on what's happened in the past, will in all likelihood happen again in the future. Now, don't confuse this with investments, because with investments, you're looking at forward earnings and you're looking at forward performance of a company, and you're looking at investing in that company because you believe they're going to do X, Y, and Z with that company. That's a completely different ballgame. When you're trading, you're literally trying to take something out of the market. So you're looking for some liquidity. You're saying this Forex pair is going to move up, and it's going to move up for this period of time, and then I'm going to take profit and get out. It's a short-term thing, trading. And generally, it's leverage. People have leverage on their trading, so they can invest $100 to make $1,000 of trades. And it's a completely different ball game. Investing is time in the market. Trading is timing the market. And nobody can time the market. You should know this. And you've probably figured this out by now. Otherwise, you probably wouldn't be watching my video or a number of other YouTube videos. Try and find that better system. that's going to get you out of the hole. I hate to tell you this, but there isn't one. There isn't a system that's going to dig you out the hole, because nobody can time the market, which is why I keep telling you, separate the lines from the strategy. Watch my previous videos where I talk about strategy and only strategy. At least my last 3 videos only talk about strategy. And those videos will give you the answer. Guys, while you're here, join the members area. Get the trade of the day every day. Get a little few perks and become part of the team. Become part of that A team and join us for the live shows on every Tuesday and Thursday. Tuesdays, 1100 GMT plus 2. Thursdays, 1400 GMT plus 2. And subscribe. Come and join the team, man. Be here on a regular basis. I hope this video helps you somewhat, if not a little bit. Thanks for watching, guys. Keep your feet on the ground. Reach for the sky. Till the next time. Cheers. Ciao. And bye.